Hello.
Hello, how are you? Good
Uh,
morning.
morning. How are you?
I'm very good.
Okay. Sorry for starting a little bit late this morning. Yeah, I'm not feeling too well. I don't know, maybe yesterday I had too much of screen time, so I'm having a little
Oh,
headache and my eyes are paining.
you want to postpone it?
Now let's do 1 hour. We can do 1 hour and then
Okay.
continue tomorrow.
Okay.
All right. How have you been? How's the morning so far?
Not bad. Not bad. So yesterday, as you said, me too is the same thing. I was very tired yesterday and last night. I went to sleep again last night, very late. So
Okay.
this morning it was hard to wake up. Yeah,
I
but
can
that's nice.
understand. Yeah. All right. Okay, so we're going to continue from where we left off last
Okay.
time. We were looking at the market structure and we're looking at how we can map the market structure from the higher time frame to the lower time frame. Okay.
Okay.
Just a moment. Okay, so we're looking at how you can map the structure from the lower time frame to the higher time frame. So we began with the daily time frame, and you can even take it as far as weekly. For example, you can look at the weekly, because like I said last time, structure is structure. It doesn't matter what time frame you're looking at it. So you can look at the weekly and still see the same things. All right. So you can see that on the weekly time frame, we had to break to the upside. We were downtrend on weekly until we took out this high right here. And after we took out that high, the market now is in an unconfirmed uptrend, meaning that until we put two weekly highs, we are just unconfirmed uptrend. So this is how the weekly looks like. So then we went to our daily. We looked at our daily, although yesterday we only started with our daily, which is not so much of a problem, but it's okay. We can either start on a daily or on a weekly. It's not a big deal. So this is what we did on our daily market structure. We looked at how we could map our structure. And just to put a little of maybe the drawings here, you can see that if we follow what we had been learning on our theory, this is the exact thing that we've been looking at, and we just decided to apply it on a real chart. So you can see this is how structure works, and this is how structure develops. Okay, so the lot of variations with how low the market is going to go in pullback and how high the market is going to go in creating a swing structure. But however the market does, the most important thing that we must know is that structure will always vary. All right, it's never perfect, and it's just our job to be able to interpret what the market is really doing for us, like, and be able to understand, at least based on what we have learned, how to interpret these variations in market structure. So yeah, this is what we did. And let me just put this thing so that once we go on a 4 hour, we may be able to see some works. Lower low, lower high, lower low, then higher high, higher low, higher high, then lower low, lower high, lower low, lower high, lower low, then higher high, higher low, higher high, higher low, higher high, and higher low, higher high, higher low, higher high, higher low, higher high, and higher low, and higher high. So, okay, this is our daily structure. This is our daily structure. And then now we went to a lower time frame, which is the 4 hours. And on the 4 hours, we're able now to be able to map out the structure based on this daily structure. So this is our higher time frame market structure, which is a daily. And like I said, when we were doing our session, I said a swing on the higher time frame is a trend on the lower time frame. And what that means is exactly this. So right here, you can see that this is a swing from this low right here to that high. That's a swing. But then if you go to the lower time frame, you find that that swing on the lower time frame is actually a trend. I mean, the swing on the higher time frame is actually a trend on the lower time frame. So you can see in this one, we have a higher high, higher low, 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 and the higher high. Okay, so it's actually a trend. So even right here, this pullback right here, it becomes a trend. We have the lower low, lower high, lower low, lower high, lower low. Okay, and we can go on and on looking for lower time frame structure, how it develops. You can see right here from that high to this low, that's a swing on the higher time frame. But we can also see that that swing on the higher time frame is a trend on the lower time frame. Again, how? You can see lower low, lower high, lower low, lower high right here, lower low, lower high, lower low, and then lower high, lower low, higher high, higher low, higher high. Again, price begins to push to the downside. It creates this swing high, then again it continues going to the downside. Okay, and so let's begin from somewhere. Let's begin from somewhere so that we may just map out the daily no, the 4-hour structure also, so that we just see how the 4-hour interacts with our daily time frame. So we can just see how the 4-hour interacts with our daily time frame. Okay, so from here, let me change the color. Since I'm using orange, I'm going to use black or blue for the 4 hours, or any other color, let's say green. Okay, so we can even start from here. We had a lower low, lower high, lower low, higher high. So what does that mean? It means that now the lower time frame structure has shifted, and its purpose now is to facilitate the push to the upside. So higher high, higher low, higher high, higher low, higher high, and higher low, and higher high. Then price, after we create a new high on daily, how are we going to know that we have created a new high on daily? The lower time frame must shift. So it begins to create lower low, lower high, lower low right here, lower high, and lower low right here, lower high, and lower low right here, lower high, lower low, and lower high, lower low, lower high, and lower low right here, and continues to push to the downside. We create a lower high and a lower low, and a lower high and a lower low. Again, we shift the trend on 4 hours. That shift of the trend on 4 hours is a signal to us that the daily now has printed the lower low. All right, so from that high right there, all right, from this high right there to this low, that's our daily swing leg. All right, so after we are done with our daily swing leg, how are we going to know that now a daily pullback has begun? The H4 structure must change the trend. So you can see right here, from here, we create a lower low, higher high. That means that now our daily higher low has been, lower low has been set, and price then creates a higher high on 4 hours and quickly shifts from a higher high to a lower low, meaning that a daily higher high has been set. So we know that now daily will continue to create its swing leg to the downside. So lower high and lower low. And sometimes, you know, price, like I said, it is full of variation, market structure. So you are going to have swing legs which are quite long. Sometimes swing legs are going to be short. Pullbacks are going to be long. Sometimes pullbacks are going to be short. It just depends with what the market wants to do. Okay, so again, we create the lower low on daily, and price starts doing that, starts pushing to the upside. And we can see by the change of what? The change of structure on the market on the 4 hours. So the moment the 4 hours shifts the trend, we are able to tell that the daily is also switching either into a pullback or the pullback is coming to an end. So right here, we just broke the daily structure. We broke this daily high. All right, so daily we can say we are in an uptrend, all right, and confirmed uptrend until we see another high created on daily. So, but for now, we can't say that daily is still in an uptrend. We just have one low and one high, all right? But again, we can see that we have cemented a higher high on daily. Why? Because the 4-hour trend has shifted from being a bullish trend to being a bearish trend. Again, you can see lower low, lower high, lower low, lower high, lower low, lower high, then lower low, then higher high. This is just one push, right, on daily. Okay, and I mean on 4 hours, which also happens to be our daily leg. All right, so again, we push. Why is it our daily lower high? Because the 4 hour at this moment had to shift bullish, so it became unconfirmed bullish, which is just okay. And sometimes, like I said, price may take out 3 lows, but still remain unconfirmed. So you can see right here that the market took out 3 lows, 1, 2, 3, and still remain unconfirmed because we only have 1 low and 1 high. All right. So price continues then in its original trend, lower low, lower high, lower high. Then we create a lower low right here, then lower high, then lower low, then higher high, then higher low, then higher high. 4 hour became bullish, meaning that the lower low on daily has been cemented. So now pullback daily begins. So again, we see 4 hour shift. So we now know that the daily lower high has been cemented. So now the swing leg continues. So lower low, lower high. Again, we see that now again, the daily lower low has been set, and now our daily pullback begins. Why? Because the H4 trend has shifted from being a bearish trend to being a bullish trend. Okay, so this is how the market behaves, and this is what usually happens when we are looking at the market structure. So again, we can see that this could have been a daily lower high, but then it failed to do what? It failed to continue pushing to the downside. So we wanted this low to go, but 4 hour could not continue creating lows to the downside, but instead what started happening is that the market then started pushing its way to the upside. All right, so let us also look at what the market does. Then from here, we break structure to the upside and we start creating higher highs again, and higher lows and higher highs until we see again higher low, lower low, lower high, lower low, lower high, lower low. All right, so here you can see that we broke above the daily. So this was a lower low, which went to create that higher high. So now after we create the higher high, how are we going to know that our daily higher high has been set? We want to see the H4 shift its trend. So the H4 shift in its trend, it's a sign to us that the structure or the high on daily has been set, and now a pullback has just begun. So again, we see that now, again, here we move away from a downtrend, we become uptrend. What does that mean to us? It means that the daily pullback has come to an end, and now the market is beginning to create a new swing structure. So higher low, higher high, higher low, higher high, and higher low right here. And the market continues printing the higher high. All right. And all this is one pullback. It is simply like this, except that this one is complex. And I believe last time we looked at the complex market structure. So again, we're going to look at it separately once we start looking at the lower time frame. So we tried to go up, all right, but the market pushed again to the downside. So we had a lower low, lower high, and lower low down here. We tried price breaks below this, but then nothing again happens. So all this remains a 4-hour structure until we create that high. Again, what happens? We pull back. All this is 4-hour pullback, and we break structure again. We pull back right here. Then we break structure all the way to that high. We break structure, and then again right here we are still in a 4-hour structure, although it's coinciding with a daily, until here we create a 4-hour which is independent from a daily structure, and we create a higher high, higher low, then all the way to that high is our higher high. So what we have now here is where price should give us a pullback on 4 hours in order to continue the market to the upside. So this is what the market is doing, and we are going to see how that is going to work out. Okay, any questions?
So far, good. No question now.
All right, great. Okay, so that's just a moment, sir.
Mm-hmm.
Okay. All right, again, let me just buy enough data since my data is running low. I'll be with you shortly.
Okay, no problem.
Okay, I'm back.
Okay.
All right. Yeah. So that's what we were looking at, even when we were dealing with our theory. Okay, it's the exact same thing that we were doing, and this exact same thing that we were looking at. All right. So now we can continue now. We can even go on a lower time frame. So we know the green line is our lower time frame, which is 8-4, and then we can even try maybe the 1 hour and also see what price has for us, or what price is doing. All right, so this is going to be the 1 hour, and as we begin looking at the 1 hour, okay, so as we begin looking at the 1 hour, what are these messages? Okay, so as we begin looking at the 1 hour, we can begin from, where can we begin from? Because I don't want us again to have so much of price action to deal with. Okay, so much of it right here is just similar to H4. There's no problem. So we can start from right here, and we can see that as price was pulling back, all right, although much of it would have made so much sense if we had gone to M15, but because of, let's see. Okay, let me try to get to M15. All right, so that we look at the market structure on M15. Right here. Okay, so now we have moved from higher time frame, which is a 4 hours. Then we have gone to a lower time frame, which is M15, and we will still maintain the same lines. Green is for 4 hours, and orange is for a daily. Okay, so let me just try to bring the market somewhere where. Oh, okay, so because of my plan, okay, again, cannot allow me to go anywhere lower than 4th April. So it's okay. So we'll begin from here. That is what we're going to do. So from right here, we can see that price has been pushing. So I'll just use dots so that we can be fast, but we don't have to waste so much time. So right here, we had a higher high, higher low, higher high. And now 15 minutes, I said that I need to see a pullback, which is 50 points. All right, so 50 points and above. All right, so you can see this is a 50-point pullback, which is quite all right, my structure on M15. So this is going to be my M15 structure. It's going to be my M15 structure. And yeah, so can make that one as M15. And then right here now, M15 is bearish. All right. So what we're going to observe when we start looking at the M15 market structure is that much of it will be changing so fast. Why? Because the lower time frame is very fast compared to the higher time frame. All right. And this is where you can catch so many trades on this lower time frame because of how fast it is. So again, you can see this is structure, 64 points. All right. So M15 is bearish now, confirmed bearish. As we can see, we broke structure down here. All right, so it's now confirmed bearish. So when it comes to looking at where to sell from, let's say you were looking for a selling opportunity. Let's say in this situation, you never had that selling opportunity. You never had it. You never had that selling opportunity because you would have been waiting for price to come back into these premium zones right here, but then Nasdaq never put back into that area. And what happens? We can see it did a pullback, then it continued going to the downside, breaking structure to the downside, which is something that is very good. So now, again, we have a pullback, and this time around, that pullback comes into a good area for you to sell from. All right, so you can see right here, price comes into that area where you can start looking now for some selling opportunities to take the market to the downside. And this is why M15 presents more opportunities compared to a higher time frame, which is, let's say, even 4 hours. Because 4 hours, you have to wait for quite a long time before you can see an opportunity. But with M15, you'll be having so many opportunities to sell. And with, again, having so many opportunities to sell, it means having so many fake outs, meaning that, again, the potential to making losses will also be high on M15 because of how fast price is going to be changing. Okay, and also, like I said, you have smaller targets on M15 because why? Because the ranges are much smaller, but we can use the M15 structure to take a trade on a higher time frame and have a very bigger target. All right, so right here, we have a lower low, all right? Then price breaks above and we have a higher high. You can see right here. So we have, again, a higher high. So the M15 has shifted and it has become bullish, all right? And yet, so you can see we are having a change in the M15 structure, and yet H4, I believe, obviously remained in a bullish bearish trend. So we have a push to the upside. Let's see if this was okay. So this was not a proper structure, so we ignore it. We're not going to consider that one. How about this one here? Even this one was not. So from right here all the way to that high, this is our M15 structure, and this is why you can see price was able to pull back. So if I put my gun box from this low right here to that high, you can see that price was able to pull back. So this was a valid trade right here. This was a valid trade right here. So could have taken this trade because it's coming into our buying area. And yeah, like I said, we in the next section or session, that's why we'll start looking at supply and demand and see where we can take our trades from. So this would have been a very nice buy, which is a 1s to 8, 1s to 7, somewhere right there. Okay, so we have a pullback. Then what happened? Then price again breaks structure to the upside. All right, after price breaks structure to the upside on M15, then we expect to see a pullback. Again, the market did pull back into these areas right here. So let me take my gun box and put it right there. So you can see price put back into these areas. Again, if you're looking for some nice buying opportunities, believe these were the trades that we capitalized on. These were nice trades that we bought. So again, you'll be looking to buy the market, and where will be your target? Your target will be the previous high. So that was the target that we took right there, and it was a nice trade. So again, entries, we are going to look at them later, but for now, let's just focus on our market structure. So right here, we can see that price wicked. All right, let me show you. Here, we never had a break of structure. So I'm not going to consider this as a break of structure because this is just a weak price closed below. So these are situations where you look at this and say, okay, this is not a break of structure. So what am I going to do? I'm going to wait for price. Price could even come further down here and would still look for some buying opportunities, like what happened right here. There was a nice buy, but price failed to continue going to the upside until we broke structure down here. Now, you know, when it comes to mapping structure on M15, this is where it becomes a little bit tricky, like I said, because you'll be confronted with a lot of noise going on the market. So which one you're going to avoid as not being structure is going to be a matter of now looking at what is it that the market is truly doing. All right. Yeah. So right here, we have a high, which was not a high according to our standards. So this is not a high according to our standards. And like I said, you'll be learning while we are doing these things in real time. So as I'll be analyzing and sharing some analysis with you, you also be learning to do the same analysis. Okay. All right. Okay, are you there? Are we together?
Yes, I'm here.
All right. So again, we can see this is a lower low. So what would have expected to see was price to come to this area. Now, sometimes what the market is going to do is that it may manipulate your area, but this was unconfirmed what? Unconfirmed low, because we only have one high and one low. So we were unconfirmed. We were unconfirmed bearish, so it's not going to be considered on M15. This is where we look so much pay so much attention to some confirmation because there's a lot of faking out. So the more we go to lower time frames, the more we pay attention to faking outs. Okay, so you can see again here, we did not break structure, but rather price just manipulated a bit, and what happened? Then price pushed to the downside. So we have not yet broken any structure as we speak until somewhere here. So this is where we now have a break of structure. So now the question is that you may ask is what has been happening with the market? All right, so all this thing has just been to manipulate, grab some liquidity right there. Then price begins to behave inside, create some internal structure. But one thing that you should know is that your range should be from that high to this low right here until we break structure to the upside. So now after we break structure to the upside, what is going to be our lower low? All right, so in this situation, all right, it requires now, because if we look at what the market is doing right here, all right, let me just come back down a little bit. Okay, so if you look at what the market is doing right here, this is where now things may become a little bit complicated, all right, a little bit complicated, because our price has given us this big range right here, all right, on M15, which, you know, it is easy for you to get lost and start asking yourself, but what is the market really doing and how should I approach this market? This range from this low right here, okay, and I'm trying to see if there's anywhere where I could have gotten it wrong. So we had this high, then we had this. Okay, all right, I see, because it was supposed to be this. This is the original high. Yeah, that's where I got it wrong as well. Okay, now let me explain what I did, because it wasn't making sense to me. Okay, so this was the high, all right, not this one. All right, I picked this one. I shouldn't have picked this one because this one failed to close, failed to break above. So it was not a genuine high. All right, so the genuine high that we had was this one right here. Okay, up to there. Okay, so this is a genuine break of structure now that we are having. Okay, all right, so I ended up picking a wrong high, which was which one? Which was this one, which I should not have done. So from here, we created this low because this failed to break. So we created this low. So from that high, we pushed all the way and created this low. Then we broke above and created that high. Then price pulled back. So we can look at this now as a pullback, as a normal pullback. All right, so we put back then into these lows. This is a genuine M15 pullback. So we created this break of structure right there. And then after we break that structure right there, created this low, all right, then we pushed and broke structure. Then we became bearish right here, all right, we became bearish right here. And then after we became bearish right there, what happens? Price came, respected something right here, pushed to the downside, failed to take out this low, then eventually took out the high. Okay, so if we were looking for some selling opportunities, quite all right, we would be looking for price to come back into these higher time frame areas, and yeah, it did so, and price tried to push to the downside, but the sell failed to work out because we needed to create a new lower low. Instead, price went ahead and created a new higher high. All right, so we can see that right here, we broke structure to the upside again, and we became bullish. So we have been bullish, all right? So we are again unconfirmed bullish. So when confirmed bearish, then we become unconfirmed bullish. And then what is the low that led to the break of structure to the upside? It's this one right here. So from that high to this low, that's a low that led to the break of structure. And of course, we are going to, you know, put our break of structure to the downside because M15 eventually led to the break of structure. And then we had a pullback, all right? And then after we had that pullback, then price continued breaking structure to the downside. So we had, I don't know if this was the one that broke structure, but let's try to put it right there and see. Nope, it didn't. So you can see already that it didn't close below. So we had this close right here. I hope you are following. I didn't lose you anywhere.
No, I'm here.
Oh.
I'm still following you.
Okay, so you are not lost. You can still
Yeah, you
understand.
can still you can still continue.
All right. So we break structure to the downside. Then what happens? Right here we have a quick pullback, which is this one right here.
It seems that I lost you. I lost you.
Yeah, I noticed also. I think it should be the network, obviously. Okay, so where are we? Let me find where we are supposed to be. All right, so we are here. Okay. So right here, we break structure to the upside. First, we broke structure to the downside right here. Broke structure to the downside. Then we also break structure to the upside like that. Okay, so now, although it doesn't look so appealing, so nice, so we just have to accept it as structure. So we break structure right here. And after we break structure, what does the market do? Market goes on to also break another structure to the upside. Let's see, this one is not structure. So from there, we can pick our gun box from down here to that high, and you can see price came into these discounted areas. So this was also our nice buys that we could have taken. And so again, we broke structure to the upside like that. Right, broke structure to the upside like that. All right, so at this moment, we can say M15 is bullish until we do what? Until we break structure to the right here, price then breaks structure to the downside. Okay, so price breaks structure to the downside. We have a pullback, then we continue breaking structure on M15 to the downside. So again, we break structure to the downside like that. Again, what happens? Let's see if this pullback right here, this minor pullback, is going to measure up. So nope, this is not a genuine pullback. So what we have right here now for us to turn bullish is to take out that high. And the moment we take out that high, then we're going to be bullish. So this is our M15 high that needs to go. plays around, does whatever it wants to do, then again it pushes to the upside. All this is internal structure. All this is internal structure. More of a complex pullback on M15, and price continues pushing to the upside. All right. So now, as price is pushing to the upside, what happens? Then we push all the way to the upside. So that was a very long move to the upside. Like, it was a very long move to the upside. All right, the very long M15 structure. And we can see from here, we pushed all the way to create that high. Then what happened? Then we created a higher low right here. Okay, so let's see what price did. If we have anything that we can classify as M15 market structure. So let's look at this one. This one is not M15 structure. So from that high, we made a pullback to create a lower low down here. So we created that lower low down there, and we went to break structure to the upside. All right, so again, let's see if this one meets the standards of our M15 structure. And again, yeah, it falls short. So now, right here, what will begin to happen is we're going to encounter lower time frame like 5 minutes, because 5 minutes we said it has to be 25 points and above. So 5 minutes has to be 25 points and above. So this could be 5 minutes. Of course, 5 minute structure, we can, if we are following 5 minute structure, we would follow that one. But on this one, I'm not going to give you up to 5 minutes. I will use 5 minutes more when we start looking at, when we start doing our analysis together, because I don't want to give you something that will end up being a confusion to you. All right, so that you become paralyzed when it comes to measuring or looking at market structure. So we have this break of structure right here. This move was caused by FOMC, which is interest rate, and we maximized on that one. It was a nice sell that we took right there. So price came into our premium area, our sell zone. We identified an area of interest to sell from, and it was a nice drop that we had. All right, so again, what do we have right here? We have a break of structure to the downside. So now we can see that the H4 higher high has been created. Now M15 is beginning to create lower lows and lower highs. And also we have this this structure also here. We also have this break of structure to the downside as a continuation of a lower low and a lower high. Yeah, exactly. All right. Let's see this one. Nope, it wasn't proper structure, so we completely ignore it. All right, now right here, this is where now we break structure to the upside and we start breaking highs. All right, meaning that the higher low on H4 should be cemented, which is this one right here. And what happens now? Price begins to push to the upside. All right, you see how easy it is to just understand market structure, right?
Yeah.
Yeah, it gives you the overall bias, the overall direction. This was 5 minute structure, so we're not going to consider it. But when we start looking at how I analyze the market, some of these things, like I said, you will learn them as we begin to analyze together, right? Yeah. Okay, so the downside, and after we break structure to the downside, we become unconfirmed bearish, but then this unconfirmed bearish 15 minutes is short-lived. Price then continues breaking to the upside, and this push was caused by CPI. Yeah, it was a CPI move. Then we capitalized on this pullback and we bought the market. All right, so it's always easy. Like I said, there will be more opportunities for you to maximize on the on the lower time frame. Okay, if you just understand how to identify structure. And like I said, structure is structure. Doesn't matter whether you're looking at it on M15 or M1 or H1, whatever time frame you're looking at it, structure will always be structure. All right, so again, we have a pullback right here. and we create that high. We break structure to the upside. And then after we break structure to the upside, what happens? Let's see if this is, nope. All right, but this should be our M15 structure, right? So we become M15 unconfirmed bearish right here, unconfirmed bearish. And then what happens? Price then continues breaking structure to the upside. So price continues breaking structure to the upside all the way to here, right? It resumes its original, move to the upside. All right. So again, what do we have right here? Okay, so what we have right here is we have a break of structure. And then how about here? We also have a break of structure because I believe this is more than 50 points to the downside. Yeah, 46, 47, 48. Okay, 48, 49. So we can give it, we can just round it up. At least it's 49 points. So 49 is close to 50. So we can compromise on that one and just pick it up as a structure. All right, so this one is also 50. All right, so it's also M15 structure. Okay. And then you can see how price pushed all the way to the upside, created that high. This was one of those moves I maximized on so much. It was a nice buy. And we created that high right there. Okay, created that high. And price then continued to put back, created a higher low, and we broke structure to the upside right here. Oh, okay. We broke structure to the upside again right there before we began to see the market begin to do what? Begin to pull back. So this was the higher low that led to the creation of that higher high. Then after we become bearish, now we may say that, okay, right here, we were now in that pullback. All right, so we put back right here, though price action wasn't so much good. It wasn't something that I really love, but yeah, price is going to do, price is price, so price will do what it feels it wants to do, right? No proper structure. How about here? No proper structure. And unless we compromise on something, that's when we can find proper structure. So again here, no proper structure. So okay, here we have 53 points. So this is where we shift from a bearish trend on M15 to a bullish trend on M15. So I'm just going to put a dot right here so that we may know that, okay, it was structure, right? Red dot. Okay. So that's structure. Then we pull back. Let's see if this pullback is going to meet our standards. Yep, it meets our standards. That's about 80 points. And we break structure again to the upside on M15 and price pushed all the way. It pulls back. That was another buying opportunity. Again, we break structure to the upside. All right, and again, we have these pullbacks. Let's measure this one and see if it conforms to our criteria. Yeah, that's about 60 points. So it is structure, despite the way it is looking so ugly, but it is structure. Okay. So we break structure again to the upside, then price pulls back into this area and finally made a deeper pullback. So we could have even took a buy from here because that was a nice pullback. And then what happened? We continue breaking structure to the upside on M15. Okay, let's look at this. If it was a fit pullback, yeah, it was, and we break structure again. This is another trade that we maximize heavily, and yeah, it paid out heavily. So price pushed all the way, created that high. Then we had a pullback again right here. Okay, so we had that break of structure. What's going on? Okay. Hmm. Hmm. Okay. Drone. All right. So, okay. So, we have a break of structure right here. Okay, break of structure. Then right here, we are now bearish for hours. So we begin to facilitate a pullback on 4 hours. And we have this pullback right here, 108 points. It's normal break of structure. Okay. And also, let's measure this one. This one was 51 points, which was structure also. But sometimes structure will be so confusing. All right. So right here, this was another sale that we took, and I'll explain such kind of sales, why this happened, because price never closed above. So there was never a break of structure to the upside. Right? Price thought to close above. There was never a break of structure to the upside. So unless if we had closed above, so you can see price was just coming to run liquidity above these areas. Okay, so we never had a break of structure. So these are those things that, sometimes you will find in the market. And once that happens, it means you just have to understand the message. So you can pick it up even from here and say that was our break of structure. Okay, so that then price will break structure to the upside, we create that higher high, then we pull back and create a higher low again. Okay, and price creates again that higher high right here. So here you can see if we had any pullbacks, yeah, that was 60 points, which is M15 pullback. And we break structure to the downside again, meaning that we needed to be bearish, but then the bearishness did not work and price continued pushing to the upside. All right, so right here, we break structure again to the upside, continued creating highs, and price pushed back. So this was a pullback that we can consider to be a pullback. All right, so we had another break of structure to the upside, and then we break structure to the downside. Okay, so then we break structure to the downside. And what happened? Again, we break structure to the downside right here. Okay, so yeah, that's normal structure. Then we break to the upside and we pull back again, we push to the upside. That was another nice buy. So until price hit the areas somewhere here, and what happened? We had a massive drop. So that massive drop led to the break of structure, shifting the market to be in a downtrend on M15, which was a pullback on M15 on H4. All right. So price was now pulling back to come into these areas of H4. All right. So what do we have? We have price pushed to the downside. We had a pullback, a break of structure to the downside. All right. Okay, so I'm going to just I can mark all these things. Like this is structure. This is structure right here. So we can also mark it and say we broke structure right here. All right. And even right here, we broke structure to the downside until we became bullish right there. So once we became bullish right here, price then came down into these areas. That was another buying opportunity right there. So the market will definitely on lower time frames, there'll be more opportunities for buys, like plenty of opportunities. Let's see this one. It doesn't fit. So we had all that pushed to the upside. Then we put back and price, yeah. The pullback that we had was not a nice one, but it was a pullback. Then we pushed all the way to the upside. Then we made another pullback. Then what happened? Price then broke structure again to the upside, M15, and we were bullish now, and the market kept on going. This was CPI, yeah, I guess. Our CPI, it was another nice move that we capitalized on. Price came again, broke structure right here, and created that higher high. We put back. We never broke below. We never closed below except until this area right here. So we never closed below except until this area right there. So what does that mean? So what that means is that we broke structure again to the upside, meaning that this now became our new lower low instead of this one. So this became our new lower low. And after we had that new lower low, price again came. We never broke below this low. You can see price just wicked it. We never broke below it. And then we continued being bullish like that. Okay, until after we created that high, what happened? This then became part of the 1 hour structure, because this was interest rate that happened, and yeah, we were able to maximize on that interest rate. It was one of those nice trades. Yeah, that we got. Okay, so again, let's see what happens. This is M15 structure. M15 structure. And we continue. Right here, we became unconfirmed bearish. We became unconfirmed bearish. And again, we broke structure to the upside like that. Any questions so far?
No.
Okay, so again, price came, pushed the downside. I missed this one. This trade I didn't take. I can even tell you which trades I took, which trades I didn't take, because I almost know this thing by heart.
Okay.
Yeah. Okay, so this one I didn't take. It was not a trade that I took, but I tried. Even this one I missed. And I think I was somewhere very busy. I don't know what I was attending to, but missed this one. And price then broke structure to the upside again. All right, and tried to take this buy right here, failed to be a buy, then price took us out with a loss. So this was that trade which never worked. Okay, so we have a break of structure. Then what happened? Then we put back Okay. So we broke structure to the downside right here. Now here, I didn't take this sell, okay, because of, I don't know what I was thinking. All right, but it was a nice sell that really paid well, 60 points. So none of these pullbacks were equal to 50 points, right? So even this one here, none of it was equal to 50 points. So you can see. So price then pushed all the way, came, mitigated this area, then dropped. Then the following day, I think that was, it should, if it's not a Thursday, then it should be a Wednesday. All right, because this was Tuesday. Wednesday was able to get this big drop right here, or this drop down here. So it was a nice trade that we took right here. And you can just see, just following structure. Okay, again, broke structure to the downside. And then, okay, broke structure to the downside. Then we also broke structure to the upside. Here, price became a little bit messy, but let's see, okay. We broke structure again to the upside. So it became bullish, then we became bearish right here. And I think this is where we are in price. You can see, didn't take this one, but I took this buy to that high. Then what happened yesterday? Yesterday we took this buy to the upside. We didn't take the sell. All right. So
Was that the price yesterday or? That's yesterday?
Yeah, this is yesterday. I took this buy, and then my anticipation was to sell the market, but I was satisfied with the buy that I'd taken because I was.
So what time is it? It was.
This was the open of the market. That was 9:30.
I think I took this one, the selling one. The sell one.
Oh, you took the sell one. This one. Oh,
yeah.
Okay. Yeah. So I was anticipating because we had broke structure, then we put back. All right. So what I was expecting, price was in my premium area. So this was what happened. So we had analyzed that price was going to, at least I wanted to see price come right here. And then, yeah. So when price hit that area first, all right, it failed to create the low. Then I knew, okay, the next thing that we're going to see is price may go back to the same area, then we drop. So I took this buy, but when the sale was happening, I was already tired and I got out of the market. I wasn't interested anymore to stay because, you know, yeah, so that's how I let this one run. So right now I'm selling the market. We had a break of structure right here. Although it's not a nice sale, but yeah, it's happening. I'm selling it from here. It's not a nice sale that I like, but I caught it from there. Let me show you. So that's what structure is all about. Okay. So we are done with F15 market structure right here. So the next thing that we are going to look at will be supply and demand. It will be supply and demand. And when we start looking at supply and demand, we are not going to spend so much time. Yeah, you can check that one. So we're not going to spend so much time because already it's just us identifying two zones of interest. That's all, where we're going to be selling from. That's all. Okay.
But yesterday you said that you were going to.
Yeah, was supposed to start today, but I'm not feeling too well right now. Like I said at
No,
first.
you said that you wanted to look at the liquidity.
No. Liquidity will be something that we're going to, that's the last topic. That's the last topic. I don't look at liquidity before supply and demand.
Oh, okay.
Yeah, it's the last topic. Okay.
Oh, okay.
Yeah, it's a last thing. Very, very last thing. Okay, because after you look at the market structure, you look at supply and demand, the next thing then is going to look at is liquidity, because liquidity is one of those confirmations that you get for your entries. Like here, we had this liquidity above, you see? So yeah, this is liquidity that we had, which price came and set.
You are the boss.
Yeah. So just relax. We will get over liquidity. So for now, I'm going to leave you with some work. Okay. So the work that I'm going to leave you is, I want you to do what I've done. You can see how we have been mapping the structure. All right. So I want.
You're gone again. You're gone.
Hello?
Yes, I'm here.
Oh, okay. All right. Just got interrupted with the internet. Yeah.
Understood.
So, what you are going to do is want you to go through this work. All right. What we have just done, just mapping structure the way you see it after looking at these lessons that we have done, just you mapping structure. And then from there, like I said, the next one is going to be way easier and much faster. Where we're going, it's not the issue of where we're spending so much time, because the area which I spend so much time teaching is market structure, because it's quite complex and it's advanced, right? That's the only place, that's the only segment where I spend so much of my time. So the rest of this course is something that is going to be so easy, and most of it you'll be learning it as we begin to do some markups and analysis together, etc., etc. All right. So firstly, I just want you to familiarize yourself so much with structure so that you may be able to do this thing on your own without my being there, okay, without me supervising you, but you are right there doing this on your own. And if you can get to a point where you know what the higher time frame is doing, you know what the lower time frame is doing, then it will even become easier for you to even take some trades and just have that bias to say, okay, I know what the market is doing at this moment. The market is about to start pushing to the upside. The market is about to start pushing to the downside. This is what we're expecting the market to do, etc., etc. Okay. Is that
So you
clear?
want me to mark it in a 4 hours and 15 minutes?
If it's okay with you, you can do that. If it's okay with you, you can do that. But if there's any other method or any other ways in which you'll be able to identify this structure the same way that I've been doing, then it will also be okay with you or with me. Yeah.
So do you want the only one thing, maybe it will take too much time for me, it's to mark it in 115 like you do it here?
Yeah, it will. Yeah, this one will take so much time because of there's so many structures, but you can see where you can begin from. We don't need so much. Yeah, price action. For me, I did this because I needed
like this. I can do it like this, but the thing is to use the tools to put the M15, like to show it's a
this thing.
Yeah.
Okay. You can. What you can do is, as long as you have learned how to measure, I've shown you how to measure. As long as it conforms to M15 pattern, like the way we were doing. If you measure the pullback like this, you say, okay, this is M15 pattern because it's above 50 points. You can get this dot and just put it right there, and you do like this. Okay, you can use these dots. It's okay. I'll still understand. I'll still see the next time we have a session. I'll still say, oh, okay, yeah, that was correct. No, here you'd have put it right here. Okay, I was just using this because for me, that's what I use normally to just see that, okay, this is a break of structure to help me with the directional bias. Okay, we broke structure to the downside. Now price will start going to the upside. But for you, if you want, you can use these dots, like you say that was a high. This is the lower high. Okay. Yeah, lower high like this. Then you say this is the lower low. This is the lower high. This is the lower. That's good. Yeah, I'll be able to know still. I'll be able to know. Use whatever method is going to be easy for you. Even on the higher time frame, you can use whatever method is going to be easy for you. And then you just connect them with this line, like the one that I'm doing. So you connect this dot like this, if it will be okay with you. All right. Okay. Yeah. Just like that. Okay. All right. So I believe we can end here today. Tomorrow is Wednesday. So tomorrow I'll still confirm. The meeting is still pending. We are going to, I believe we're going to have it again tomorrow. Okay, good. Yeah. All right. And by the way, thank you so much for the nice review. Thank you so much for the nice review and for the tip. Thank you. No problem. All right. Okay, bye.
Okay, bye. Thank you.